In this video, we're going to do a quick top-down analysis on the AUD pair, the Australian dollar USD pair, to see what opportunities the market could avail to us this morning. Now, we're going to be doing this quick breakdown so we can see if there are certain areas that we could look out for to get quick intraday opportunities to trade or quick scalps. We intend to be buying this market this morning, so we are going to be looking for long opportunities in the market, and we want to do a quick breakdown to see what to expect, where to expect it, and how we should prepare ourselves to execute such opportunities as and when they show up in the market. Remember, we are price action traders. Our role in the market is not to predict price, to predict the next moves of price, but rather to do our analysis, wait for price to act, and then our role comes in as a way of reacting to the actions of price. That's what makes us price action traders. Now, we're going to head over to the chart, but before we do that, please remember to subscribe, leave a like, and also share the video so we can pass on value to the larger, wider Forex trading community. Let's head over to the chart. So we'll start with the monthly, and what we see here on the monthly is that price moved down, then created this bullish candle, then a bearish candle for a drop, and what we see right now with this candle here is price tending to move to the upside. What we could say is this formation of the bullish candle in between the two bearish candles on either side created an area of resistance once price closed below it, and we see this new candle breaking above this resistance, but it hasn't closed yet. It could still be rejected, but as it stands now, that's how it looks like. And when you look closely, what you could see is that price with this bullish candle in between formed some kind of a W formation. Now, once this W formation is formed, what we expect is a move back to the upside to complete the W formation. So in the coming days, we could see price push up a bit to at least touch this neckline above here, or possibly these highs that were formed in the month of January. So this could turn out to be a W formation to the upside. We drop down to the weekly. So what do we see in the weekly? Breaking down this weekly chart, we can see that price, when it dropped right here, it was rejected at this area before it finally broke through, came back to retest this same area, was rejected to the downside, came back to retest it once again, was rejected again to the downside, came back, retested another time, was rejected before it broke through again, but after breaking back above it, once it dropped to retest it, it was rejected to the upside, came and was consolidating within this area, small, before it finally broke below it here. I could mark it out as a rejection in this area, a rejection, another rejection, another rejection, a retest from above, a retest from above again, another retest, another retest. So price has been heavily rejected within this area for the longest, and that makes it a very strong area of support and resistance. Now, marking it out, we see the points where price was rejected severally, here, right here, down here, again here. Finally, it's broken and closed above it. Now, what we see now is price is touching this resistance area to the upside, we could see price either rejected at this area or it break through and is rejected at this second resistance to the upside. However, as it stands now, analyzing price in the present current moment, what we see is that it's testing this resistance area, and we can anticipate a rejection of price at this area, and we could see further drops to this area. And the fact that this area has held so strongly over the weeks as a strong area of support and resistance, we could see price drop and get rejected again in this area before it bounces off to the upside. Now, should that happen, it will have formed in the market what is known as a head and shoulders pattern. In this case, it will be an inverted head and shoulder, which is a bullish pattern, and we would expect price to move further to the upside to complete what we have already seen as a potential W formation on the monthly. So we'll drop down further to the daily chart. What do we see? Now, price earlier on dropped from this area to this area down here, retraced a bit before further drops, and then came and broke above it, forming and completing a W formation with this move to the upside. Now, during the move to the upside, we see price breaking and closing above this area of resistance with this bullish candle here. After that, we see price breaking and closing upon retracing to retest this area of support. It broke and closed below it, but was rejected around this area of support. If I could mark it out here as an area of support. Now, it didn't quite touch it, but remember, support and resistance is not necessarily a point, it is rather a zone. And it was kind of oscillating between this area of support and this area down here, and that is the point from which price retested and was rejected as it retraced to the downside before a move further to the upside. Now, if we take our Fibonacci tool and measure the amount of retracement that was covered by price with this drop to the downside, measuring from the low of the move to the high of the move, we see that price retraced and touched this area between the 50% Fibonacci retracement and the 61.8 golden ratio, which is a strong area of support as far as the fibs are concerned. And it was out of here that price was bounced off to the upside. Now, this entire move was an impulsive move to the upside, a retracement, and we could see a further impulsive move to the upside to come and retest this area of resistance that we have inside. Why? Because price does not move in a straight line. It moves in a series of impulses and corrections, or strong moves and retracements. And what we see here is that there was an impulsive move, there was a retracement or a correction. Now, after a correction, what do we expect? Another impulsive move. Does it always happen? No, not always. But here we are just anticipating what could happen in the market for us to be able to analyze it correctly, to make informed decisions when it comes to trade placements and executions. Now, dropping further down, so we have now what we see right here we are expecting further moves to the upside to come and retest this area of resistance to the upside. So we'll drop further down to the 4-hour time frame. Now, in the 4-hour time frame, what we see is, looking to the left, there's a very clean range area to the left with no impediments of price moving to the upside, apart from the resistance that only appears at this area here and right up here. Basically, this consolidation area is what we see as the resistance inside that could stop price from moving to the upside. But as it stands now, price has slightly broken and closed above this resistance area here, and with this candle it is retesting it on the 4-hour. And what we could do is go to the lower time frames and look out for simple day trades or quick scalps, taking advantage of price covering this clean range on the left to the upside. So we'll be expecting some buy positions to come to us for us to execute to the upside. Now, when it comes to trade execution, the 4-hour is mainly for our swing trades. But if you're looking to take quick scalps or some intraday day trades, what we could do is drop further down to the 1-hour to see what is happening. And we can see that currently this candle that is just printing seems to be bouncing off this area of support that we have marked out from the 4-hour. So that could be a good indication for us to prepare ourselves for quick buys within this area. Dropping further down to the 30 minutes, what we see, if I could just clean it up, is price consolidated somehow in this area. So if it could close above this, if I could maybe just remove this area of resistance we marked out on the 4-hour, so I can keep the charts clean. Now, if price can break and close back above this minor resistance area created in the 30 minutes, we can prepare ourselves to take advantage of the bullish momentum coming in, and we would look to take trades to the upside. And that could have us target this area for quick buys before we see price drop down to retest this area again before moving back again to the upside. So that's our quick analysis in the Aussie dollar, and hope once the opportunities come for quick day trades or maybe quick simple scalps, you will be able to take advantage of them within this area that we have marked out. So what we're expecting is some kind of positions that we would be looking at taking from this area. So that's it for now. If you're new to the channel, do not forget to subscribe and to like the video as well. You could also share it, as well as click that bell icon so you can be alerted every time that we post new content on the channel. Alright, we'll see you again.